Hello guys, welcome back to the channel here. I will give you so many educational tips and forex trading. In today's video, we are going to teach you how to interpret news and what you need to know about news trading. On my chat here, we are on forexfactory.com. We have others forex news websites also like the my book and others like that. Then we have them on a chart. Firstly, let's know how the interface look like on Forex Factory here. The first thing you are going to see the economy calendars, which are the news events. This is the time this year at the time the news is going to happen. This year at the currency pairs is going to be affected this year. Why this year? These colors are the impacts. This yellow impact means low impact on the currency. Why this red means high impact on the currency. Why this one like just like orange mean medium impact on the currency pairs. Here are the details. If you want to look the details about the Italians on the for the Euro USD for the Italians AM production here, we click on the impact here. It will bring us to the page. You see, they will give us some notes here, some things you have to know about the Italian news here. That's change in total inflation adjusted value of output products by manufacturer. MICE neutral effect. Actual greater than forecast is good for the currency. If the actual that's the release is greater than the forecasted by the website, then it's good for the currency. So try to check the details about the news. So this is the actuals, this is the actual, this is the forecast, this is the previous, and if you want to look the graph of the news, this is the graph. Then if you want to change, let's go to the NFP, the last NFP, some volatile news. That's the NFP. Let's check that is first Friday, that is 5. Let's apply setting. Yes, this is the NFP news on July 5. There's the NFP news. The iron part, this should be a sell. This is the forecast, this is the forecasted, this is the previous. So let's look the notes for the NFP, one of the NFP. So actual effect is that actual greater than forecast is good for the currency. If the actual is greater than the forecasted, is good for the currency. Let's check. So the actual is greater than the forecast is good for the currency. That means USD is strengthening that day. USD have some strength that day. So let's go back to our charts, our normal one. That's 10. Let's apply settings. And if you want to change your currency on the chart, then you went wait, if you want to filter some of the currency pairs, either some are not yours here, you can just come here to the filter here, then you select your preferred currency and apply filter. Like now I want to remove the AUD. I just want to remove it for this tutorial. Then JPY, and for the event type I want to remove business service. The mix, I just want to for this tutorial I will put it back. Then I apply filter. Then it will, they see there is no more AUD on the chart again. If you want to apply some currency pairs also, then you apply it here. The forex currency pairs, you apply it here. Then you click on apply filter. Then it will go back. Now let's go back to a chart and see some news events on the charts that has happened. Let's Today is July 10th, right? I mean, July 10th, right? That also is the one that happened to NZD on 3 a.m. today. Let's go back to our charts and see the one on NZD. Let's see the impact rate. Let's see the impact rate. The impact. So actual greater than forecast is good for the currency. Okay, if the actual. So the actual here is the same with the forecast. That means is small, is the same with the forecast here, forecasted here. So let's check our chart now. Let's go to the NZD. Let's find the NZD, USD, NZD U. Okay, let's look about the NZD USD, the charts. We want to look about the news events and the charts. That's of 3 a.m. Let's put a chart to 15-minute time frame. You see, this is the news event. You see the spike. This is the news events here. This is the news event of 3 o'clock. This is the news event. You see the spike. So traders do care about news, because be trading technical analysis and not backing it up with news is somehow risky because of the volatility, the spikes during that time. So when you're applying your technical analysis, always make sure you check the economic calendar frequently. Make sure it's important. Let's see some news event. Let's look about this is the NFP, the last NFP here. This NFP I recommend. This is the NFP I recognize. Is this NFP here? This is the NFP, last NFP. So you see the spike before the candle became. So we have the bullish, then after. So I trade after the news release. I don't trade news. I prefer trading after the release, because there is so many opportunity after the release of a news, more than risking yourself during the news. So let's now talk about let's now talk about the fundamental trading in forex trading. Once again, welcome to the channel. Today we are diving deep into the world of fundamental analysis in forex trading. If you want to understand the force that move currency price, this is the video for you. We will cover key economic indicators, central bank policy, interest rates, and the impact of geopolitical events. So let's get started. Number one, we have the key economic indicator, which is gross. Number one of the key economic indicator is the gross domestic product, GDP. GDP measures the total economic output of a country. It is vital indicator of the economic health. When a country GDP is growing, its currency typically strengthens as investors gain confidence in its economy. Conversely, a declining GDP can weaken a currency. So let's move to some second key economic indicator. We have the unemployment rate. The unemployment rate shows the percentage of the workforce that is jobless and actively seeking employment. High unemployment usually signal economic trouble and can lead to a weaker currency. Low unemployment, on the other hand, suggests a robust economy and can strengthen the currency. So let's move to the third key economic indicator. We have the inflation rate. Inflation measures the rate at which price for goods and services rise. Moderate inflation is normal in a growing economy, but high inflation can erode purchasing power. Central banks often adjust interest rates to control inflation, which in turn affect the currency value. Number 4, we have the consumer price index, that's the CPI news. The CPI track change in the price level of a basket of consumer goods and services. It is primarily measure of inflation. Rising CPI typically lead to central bank to raise interest rates, boosting the currency. Falling CPI might prompt rate cuts, weakening the currency. Number 5, number 5 is retail sales. Retail sales data reflects consumer spending, a major component of GDP. Strong retail sales suggest economic growth and can strengthen a currency, which weak retail sales might indicate economic problem and weaken the currency. So let's now talk about the central bank's policy and interest rate. Number 1, central bank role. Central bank like the Federal Reserves in the US or the European Central Bank control monetary policy. They use tools like interest rate and open market operation to influence economic activities and maintain stability. Number 2, number 2 of central bank policy and interest rate is the interest rate. Interest rates are a central tool in monetary policies. Higher interest rates attract foreign investors seeking better returns, which can strengthen the currency. Lower interest rates tend to weaken the currency as they offer less attractive return. Number 3 is quantitative easing, that's QE. QE is a policy where central bank buy government securities to increase the money supply and stimulate the economy. This can lead to currency depreciation due to increased money supply. Number 4 is forward guidance. Central bank provide forward guidance to communicate future monetary policy intentions. Clear, consistent guidance can stabilize markets, while uncertainty can lead to volatility in currency price. Now let's talk about the impact of geopolitical events. Number 1, political stability. Political stability is crucial for economic confidence. Elections, government change, and political unrest can create uncertainty, impacting currency value. Stable governments attract investment, strengthening the currency. Now, number 2, then second, we have trade agreements and tariff. Trade agreements and tariffs directly affect international trade dynamic. Favorable trade agreement can boost economic growth and strengthen the currency, while tariff and trade wars can hinder economic performance and weaken the currency. The third one, we have natural disasters. Natural disasters can disrupt economic activities and damage infrastructure, like the one we have in Russia, then which affects the currency, negatively impacting the economic and weakening the currency. Recovery efforts might lead to temporary boost, but the immediate effect is usually negative. Number 5, we have the global conflict. Wars, terrorism, and other conflicts create uncertainty and risk, often leading to capital flight to safe haven currency like the US dollar, Swiss franc, or Japanese yen. These can strengthen this currency while weakening those of the currency directly involved. Conclusion: fundamental analysis is a powerful tool for understanding and predicting currency movement. By keeping an eye on key economic indicators, central bank policies, and geopolitical events, traders can make more informed decisions. Now let's briefly summarize what we have teaching in this, which is about central bank policy and interest rates. We talk about central bank role, we talk about interest rate, we talk about quantitative easing, that's QE. We talk about forward guidance. We talk about impact of geopolitical events. We talk about political stability. We talk about agreement and tariff. We talk about natural disaster. We talk about global conflicts. Then we talk about some high volatility, that's the high volatility news that happen. We talk about the CPI, that's the consumer price index. We talk about the inflation rate news. We talk about the unemployment rate like the NFP. We talk about the gross domestic products in this video. Then thank you for watching. Don't forget to like, comment and subscribe for more insights into the world of forex trading. See you in the next video.